as to what you say to clients who are kind of convinced the worst is going to happen. Like other than showing them like the graph of the S&P 500 over the last like 75 years, how can you like tell your clients it's not all going to be a crisis?
Monet, please come up.
Well, hello, and thank you for coming to the Few podcast. My name is Rob Schein, and today we have a wonderful guest, Monet. Thank you for joining us.
Thank you. I'm happy to be here.
So, Monet, where are we right now? What are we doing?
We're going to kind of start talking through kind of like my journey and where I am right now, basing it off kind of everything that we talked about with finance. But is there anything specifically you want me to start off with?
You're a double major and a minor.
Yes.
So tell me about what you're majoring in, what your minor is, and tell me a little bit about Monet.
Okay. So yes, I'm a double major in real estate and finance and a minor in entrepreneurship. And I guess the path that kind of led me to choosing to study this actually started off with my dad owning an Italian restaurant for over 20 years. So I would help him out in the restaurant, kind of got that entrepreneurial like feel in the restaurant business, and he would invest in real estate on the side around Boulder, Colorado, where I'm from, real estate. So I was there with all the construction on those properties. So I got, everything from the landscaping to like brick, concrete, kind of did all the remodel. And I quickly realized like, wow, you can add 30% to rents just by remodeling the interior of these properties. So that kind of initially drew me to real estate, and that kind of made me want to focus on studying real estate and then finance in college. My idea around college wasn't the path that I initially expected. I always planned to be a student athlete. So I was a long distance swimmer and runner. And so I was, doing all the college tours, talking to all like the sports athletes.
It's a very competitive process, and it says a lot about who you are too, your DNA, right? You're not afraid to get up early, work late, outwork your competition. So that's really cool. So now you've channeled that into your future career, if you will, right?
Yes. Yeah. I always up at 5 a.m. every day in high school. So translates now I'm up 5 a.m. every day here, even though I'm not doing sports, still keeping in that fitness. But I think it kind of translated well to deciding where I want to be with my past. I do kind of have that grind, hard work, entrepreneurial spirit just because of my background with sports. And that kind of led me into wanting to pursue a path in real estate where it is more entrepreneurial kind of avenue where it's not salary based, it's commission based. You got to work those long hours and you really have to rely on yourself.
So on the real estate side, what interests you the most? Is it sort of a fix and flip? Is it dealing with clients on the residential real estate side? Is it sort of building it from ground up? What specifically excites you?
Yeah, that's a great question. So like I said initially, my scope of real estate was so small. It was on those small remodels of those multifamily projects. And when I got to USD and obviously the great business program, and in my first real estate class, I understood my idea of real estate was so much smaller than what it actually is. So as I was kind of, talking to the amazing advisors in the BMC and exploring all my options, going to events like these, I'm actually on 3 e-boards. So I've sit in on a lot of these panels, network quite a bit. I was at this real estate brokerage panel last year. There was a guy from JLL there, and I went up to him and I was like, I applied. I want to work at JLL. And followed up, networked my way into that internship, which was a capital markets internship. So that was my first kind of experience within real estate brokerage. That was definitely more dealing with debt, equity, investment sales. So
How did you like that?
I liked it. It was a very analytical role. I was in Excel 10 hours a day. Coming out of that, yes.
How many people like Excel? Come on, you have to learn to love Excel if you're in the business college. It's awesome.
Yeah. So I did learn to love it, but I think I took away a lot from that internship as to where I want to go with my path, since you kind of do touch so many different avenues being at a bigger company like that. Everything that I thought I was going to learn from JLL, like, underwriting better, drafting up OMs, going on property tours. I learned all of that, but my key takeaways were definitely bigger picture as to where I really see myself in my future and kind of how I want to transition after that internship. So at the end, they gave us a review of what we did well. And a couple of things that stood out to me is they said I was good at networking and connecting with people. So I was like, okay, maybe I want to look for not as much of an analytical role and more of a role where I can balance both the analytics that I enjoy and the people that I enjoy. So coming out of from there, like you spoke about, the importance of networking, I was determined to network these past months after finishing the internship to talk with as many professionals as I can to figure out a role that really suits my interests. And I came to the conclusion that was brokerage, and specifically being on a team who really value me and see my ability to grow within the company and not kind of hold me in a box where I'm, just maybe coordinating events, but more I'm out there on the field. I'm able to grind and I'm able to kind of make an impact that I want. So that kind of led me to brokerage.
Fantastic. And so I can see a theme right here of like work ethic, also working alongside your father and sort of family run business, but then also having that sort of initiative to sort of go through one, networking your way to an opportunity, using that opportunity to see what you like, but what also you don't like. I think that's one of the key things here. I did several internships in my industry when I started out. And then I also worked, you said you're on 3 boards.
Yeah.
Tell me about those.
Joined Women in Business was my first U board. I joined actually my freshman year, and now I'm vice president, which I absolutely love Women in Business. It's been such an impactful part of my career. Real Estate Society, this is my first year on it. Absolutely loved it. I've been an active member since my freshman year. Just being able to combine passions has been great. I'm also on my sororities e-board where I focus on creating events, which actually it translated well because during my internship, I was able to plan company-wide events like pickleball tournaments and cornhole tournaments. So it did help out.
In my industry, especially for wealth management, it's not just investing in portfolios, right? It's the networking and the client relationships and then coming up with ideas of, we spend a lot of time in the office doing event planning for client events. And like all of that, all these skills and practical applications are so super transferable because we're still doing that in our industry every day.
Yeah.
So
Yeah, I think especially when you're more in like a human facing industry and you're spending, hours with these people every single day, you really grow to be family. So having those events is so important, but having events where, you can be interactive with clients is essential. I remember someone told me in real estate, you either have to learn how to ski and you have to learn how to play golf because that's where they're making their deals. So I've been taking golf lessons.
that's not a bad idea. Actually, it's a very good way to start. I've had a lot of golf lessons and just stick to it because I still suck. It's and that's probably because I spend all the time in the office, not on the golf course. But yeah, from a networking perspective, golf is a home run, tennis, and all the other fun sports as well. Pickleball might be easier for everybody to pick up.
Yeah.
So go back to JLL, your internship, you did underwriting on a $100 billion portfolio, right?
It was a $1.1 billion portfolio.
Right.
So I always knew, numbers was the backbone to commercial real estate. A lot of people are like, you're selling the numbers in real estate. And I think that's the differences between residential and commercials. Residential, a lot more emotional. Commercial is solely based on what are the returns? Will this make me a profit? So it's all about having a great understanding of the numbers. And that's definitely what led me into wanting to put a lot of focus on finance. Because like I said, I was in the numbers all day, building out pro formas, helping underwrite $1.1 billion deals.
Do you think you would be doing that when you first saw on an internship?
Absolutely not. It was
You're like, here's my homework.
it was second day in the internship.
Yeah.
And they sit us down and they're like, yep, you guys are underwriting this $1.1 billion portfolio. So, I mean, what a start to an internship.
That's wonderful.
Yeah.
Anybody who has interns in the office, it's important work.
Oh, yeah.
Like we rely on that stuff because it saves us time. It's great for cutting your teeth and learning. I mean, we can pick it off if it's like, but if it's right there, it's very, very helpful.
Yeah. Yeah.
And it's a win-win, right?
I agree. I think every day I walked in the office, had no idea what I was doing. It was a great experience. And I definitely kind of understood the importance between finance and real estate.
So you're a senior.
Yes.
Okay. And we'll get to what you're going to be doing after graduation. But before we do that, I always love to do this. What advice would you give to your younger self? Let's say a freshman or sophomore on campus today. We see where you are. We've seen the grind and the hustle that you put into it. What advice would you give to sort of the younger generation that are just starting out at the USD campus?
That's a great question. I think going off what you said, talking with as many professionals as you can. That has been the most essential part in not only getting my jobs, but figuring out what I want to do. I was talking with people in development, private equity, brokerage, across various fields. And that is what ultimately allowed me to narrow down, like, brokerage is what I want to be on. But not only that, figuring out what are your strengths and talking with professionals who have been in the industry for 15, 20 years, they have a much better read than this young college student having so many different options. So I didn't really understand the importance of networking until my junior year. And I guess I've kind of fast-tracked it. I've been doing about like 4 to 6 professional meetings a week. And that takes a lot of time. So I would say starting, your freshman, sophomore year and just building up that network at a young age is just absolutely vital for not only finding a job, but figuring out where you should be.
Fantastic advice. Tell us about what you're going to do after graduation.
Actually, last week, I got a job opportunity to join a team at CBRE. So I will be doing that post-graduation, which I'm extremely excited about. They kind of hit all my criteria of commercial real estate in San Diego, being on a team where they see me grow, and being at a great company. So I'm extremely excited to be doing that. I'm actually starting part-time in February, so...
Hit the ground running. Oh, that's fantastic. Well, Monet, we're excited for all your success. Your hard work is a testament to not only how you were raised, but who you are. And so we see big and bright things in the future. But thank you for joining me today.
Thank you so much, Rob. I really appreciate it. This has been great.
So what we're going to do is just flip to Q&A from that.
Yes. I have one question that I want to ask, but due to time, I'll only ask one. And then we'll open up to audience Q&A. So in all of my classes, when I'm talking to professors or professionals in the industry, everyone's kind of talking about AI and how it's shaping, the future of the job industry and honestly the world. How do you see AI shaping the future of wealth management?
Great question. First and foremost, everyone should be using AI every single day. I'm sure we are. If you're not, make certain that you do as your part of your daily regimen, because either it's going to control you or you're going to control it, right? Number one. Number two, if the more you know of it, the more you can add value to, let's say, firms like mine or older generations like mine, right? So you guys are quicker, faster, and stronger with that. So that's a value add day one, dollar one. The question number one is, will it be wealth management? Will it be investment management specifically? And so there was a study that just came out. They showed like 10 ETFs that were AI driven and managed, and they underperformed. And the reason why is because they didn't predict the outperformance of the technology contribution to AI. So they were unable to predict the future. Kind of interesting, right?
Very.
Counterintuitive. At the end of the day, the industry that I'm in is a relationship business. People want to see their money. They want to have confidence that the person in front of them has a relationship, knows their kids, knows their grandkids, knows all their intimate issues as it relates to money. So, it's the Jerry Maguire, if you haven't seen a movie, great movie by Tom Cruise, but it's key to this business is personal relationship. So in any industry, it's not going to go away. Now, there are some things that I use on a daily application to use quicker, faster for AI, right? Even on my CNBC. I'm like, hey, listen, tighten up my notes. Or we would be on conference calls. So it's all earnings reports, right? So in our industry, we'll hit an earnings report, but you want to be on a conference call. Conference call could be an hour and a half. So you basically get the transcript and I say, throw that into AI. And I say, hey, listen, how many times did they say the word AI? 126 times. Or how many times did they say the word recession, right? So you can pick up on those. And analysts, we use that from sort of clues, if you will. So it's quicker, faster, stronger. And obviously, the application in terms of even class notes, right? We're using that in our investment management world on a daily basis. If you're in a relationship management business, you're not going to be obsolete, but you definitely need to harness the information technology to survive and even have a competitive advantage going forward.
I think that is so true. I think those who are able to utilize AI will ultimately outperform those who don't, just because it makes you more effective and it makes you have a better understanding of so much. I also think it's very interesting in more human-facing roles, especially in something like wealth management, where it is, much more of a people-facing industry than others. And people have different values with their money. And that's something that a professional like you can contribute better than relying on a robot.
1,000%. You can transfer, if you do everything right from estate planning, investment management, and working with your team, you can transfer money, wealth within families easily. It's hard to transfer the values that are associated with that money. So that's where, we come in our seat, and that's where the client sees the value. Another thing I would also say is like interview prep, right? You said prepping for interviews. So use AI for your interview preps. Here's what you need to do. Don't ever walk into an interview with the person that you're interviewing and the company that you're interviewing with and not know a damn thing, right? You have to know, like, literally read my bio. You went to the University of Arizona. I don't care if you went to Arizona State University and you're my opposite, right? Have that relatable connection. I've had people sit in front of me who wanted a job and they're like, I don't know anything about your firm. Okay. Thank you. That's terrible. It's a terrible look. But then you could take the job description that you're going for on that interview, put it into AI and say, what are all the possible questions I might get? And I'll over prepare, sound natural, but then have AI record your answers and then say, hey, critique me. And then it'll critique you. So I don't know if you've done that, but that's another example.
Oh, I do that for a majority of my meetings, and I'll have conversations in my kitchen with AI on my phone, and my roommates think I'm crazy for just talking to the AI.
You're part of the future. Okay, other questions?
I have a question for both Rob and Monet. More on the topic of networking and building connections. I was wondering if there's any instances where you, for example, engage in any networking, like coffee chats or events, and maybe if you ever transformed those connections in kind of like more of a mentorship. Because I feel like having a mentor in your career can have an enormous impact. And I was just curious how you went about that and how you managed to create a connection and move it into a mentorship position.
We'll go first.
I actually, a close friend of mine who's became my mentor said the importance of having mentors kind of at all ages, because they can all give you a different perspective. So having someone a few years out of college, having someone, who's been in the industry for 10 years and then someone, 20 plus years, because they can all give you a different perspective. And I definitely feel like through my coffee chats and meetings, I've gained those mentors. I'm going in for advice, but then we continue the relationship. We really hit it off. And, we start going on walks and doing other activities besides just coffee chat. So just based on who I've hit it off with, I've definitely gained mentors through doing all these meetings.
Absolutely. It's happened in my personal life and my career, and still to this day. I'll even be networking, and let's say I see somebody who would be on my unbelievable client list, but I know that he has a ton of other financial advisors and I'm not even in his universe, right? And oh, by the way, I manage $600 million assets under management and advise over $2 billion for my clients in terms of my book of business. But there are some that are up here, right? You always set your goals high, that maybe they won't be a client, but they have so much business knowledge that I've built a friendship that they're my mentor. And I've been completely upfront and respectful. Listen, I'm not here to sever any existing relationships. I want to disarm them. I'm not looking for anything from you, but I do see your business expertise, and I want to learn if you're open to having that relationship. So you kind of want to disarm. What are you trying to get out of me? But when you have people at that caliber, if you will, on the professional standpoint. But I always still have, to this day, I've mentorships. In college, I had 3 internships, right? Worked for the office of the president of the University of Arizona, ran the American Marketing Association, and then also, did Merrill Lynch. So I was an intern at Merrill Lynch, and I worked, over 20 hours a week there. In every facet, from the president of the university and how he handled everything, he was a mentor. To Merrill Lynch. Actually, I learned more in my Merrill Lynch internship of how not to run a business and how not to be a financial advisor. Because there are straight up, total a-holes. There was guys in our industry that I would look up from my cubicle after making 100 cold calls a day, and I loved it. And then some guy would just be some secretary or some person or some client, And I just made a mental note. I'm like, you know what? When I'm in this industry, I'm never going to do that. And that was just as impactful to me. And I told this to my interns, even Sergio. I said, listen, my job is to show you what I can model for you, what you like, but also what you don't like. Okay. I'm not the best in the industry. I'm not perfect. There are going to be some things where you'd be like, hey, I don't like what you're doing. Then learn from that. Do it better.
Hey everyone, welcome. I'm Bronwyn Eisen. I'm the CEO, co-founder, and co-host of the Confidence Summit that is happening February 27th and 28th at the beautiful Ritz-Carlton in Rancho Mirage, California. You're not going to want to miss this year's Confidence Summit, so join us again February 27th and 28th. We'll see you soon. And be sure to grab your ticket at societyofthefew.org.
I have a quick question. I'm currently going through my Master's of Science of Finance program, and I'm actually looking to do exactly what you're doing right now. But I've been asking a lot of the advisors that I've seen this very philosophical question. I want to know your answer to this. What do you think is the true purpose of raising all of this money? Like, what is the whole point of, going to an advisor and saying, I want to make this much money? Is it because clients are saying, I want to do this for a purpose, or because I want to feel happy about myself? Is it kind of like a more deeper thing, or is it just purely expenses and income?
A great question. Thank you for asking that question. The way I think about it is differently in the sense that I'm addicted to helping people. I literally am. Like, there's not many, it's not uncommon for me. And it just so happened a month ago, where a little lady, husband just died, has nobody. And she's with a current financial advisor that is absolutely ripping her off. Like, absolutely ripping her off. And she was introduced to me. I was able to help her. She moved her stuff to me. And we did the financial plan, and I showed her a way forward on how she's going to be okay financially speaking. Okay. In my office, the weight off of her shoulders, emotionally, physically, it was a real, almost religious experience thing, where she starts crying and breaking down, and no one's ever been on my side. No one's ever helped me. I don't know if I could pay my own bills. She doesn't know what she doesn't know. But to have that personal connection, right? Her name's Lynn. And to be able to help Lynn, and then tomorrow be able to have the privilege and the blessing to do that again. And she doesn't have the most money in the world. That's not why I'm put here in this world. Right. My job, God blessed me with an opportunity to connect with that person that needs my help. And that's why I do what I do. Conversely, and I think about this all the time, I'm not a doctor. My mom always wanted me to be a doctor. Sorry, Mom. I'm a doctor in finance. But I do this for Lynn. My mom is in a doctor's office, and that doctor can help my mom in the way that I help Lynn with his skill set. That's why we do what we do. Why do I want more? Is because my three client service associates, right? We live in California. California's a dual income state. Okay, they're all single, right? They're divorced and so on and so forth. They can't make enough, right? And I'm trying to pay them as much as I humanly can. So I want to grow the book of business to provide more for them so they feel comfortable and safe and secure, and they can do everything they can do for my clients, and we can serve together on a daily basis. That's why I want more. And I also have 4 kids in college and everything else. So yeah, but I mean, that's my why.
Thank you. Yeah, I think out of anyone I've ever asked that question so far, you gave the most, I would say, relatable and the most real reason on why you should pursue this path. I really appreciate that. Thank you.
I really liked what you said, kind of about like the doomsday scenario people go to, kind of reading the headlines, thinking that the market's going to crash, like I'm going to lose all of my money. So I guess I'm just kind of curious as to what you say to clients who are kind of convinced the worst is going to happen, other than showing them like the graph of the S&P 500 over the last like 75 years. How can you tell your clients it's not all going to be a crisis?
Great question. And so number one, it really starts out with, if I build their financial plan properly and I know how much risk they either need to take or dial back based upon their pre-existing portfolio, right? They already had a relationship that come to me, and then sort of we rebalance and reallocate. And what I do for my clients is I always sort of do belt and suspenders. So I make certain that if we have a 20% correction based upon their plan in my mind, I already know that they're going to be okay. So I have certainty that I can sleep at night. Now, the bedside manner, personal communication, sort of having the ability to provide the confidence to let them know that it's going to be okay even when markets are pulled back by 10%, pull back the perspective, okay, and show them sort of the client-facing charts that I said and I showed you. But I also show them a path forward, okay? If we are down by 10%, you're going to be okay because I've already provisioned 2 years or 3 years of income that even if we have to ride out the rest of your portfolio, percentage of your portfolio that needs to ride out that bear market, your lifestyle is not going to change because I've already planned for that, number one, okay? Number two, realistically, we have to know what we own and why we own it. So I know we have good quality companies with strong earnings. Now, if I happen to see a recession on the horizon, we will strategic rebalance and pull back. Or conversely, when March of 2000 and April of 2000, when the market was down by 20%, 2 months in a row, we strategically rebalanced for even our oldest clients, money out of treasuries, money out of cash, money out of fixed income, and we bought everything that was down. And it was when just once in a generational trade. And then I know that my process, investment management process, I have the confidence to know that I can get my client beyond the goal line and have more money left over for the next generation.
Hi, Robert. This is more of like investment side of things. So obviously, I know you kind of help your like clients with investing. I'm sure they're right now asking all about AI and stuff. So what kind of advice are you giving them regarding how they're positioning for AI? And do you see it as like a long-term change in the markets, like previous technological stuff, like the dot-com boom, or do you see it as more of a short-term, like temporary thing?
Yeah. So, and I was in the industry, not licensed. I got licensed in 2000. So I've been in the industry since it's for 25 years now. But going back to the late 90s is when I was interning, right? And so that was the dot-com boom and then bust, right? And I lived through that. In fact, I started my career on day one when the market basically started going down. I started my career when the market was down 9% the first year, 11% the next year, and then 22% the third year of my career. But by the way, conversely, that's the best time to be cold calling. That's the best time to be calling other financial advisors' clients because they're not talking to them at that moment. So for me, because I was proactive, I was out there, I was building my book of business and I was basically taking in everyone else's clients because all the old guys didn't want to call their clients because their portfolios were down. So that worked out for me because I saw the opportunity there. You're asking about AI. On the AI side of things, the late 90s, there's like eBay was one of the only companies that had a cash flow. Every other company did not make money. Right now, if you just take the Mag 7, it's more GDP money than like top 10 countries in the world. Like they're printing money. So a valuation of a stock is based upon the cash flow, the EBITDA. So that's real. So does it shrink depending upon a recession or I don't know. Is it real? Who's going to make money? It's the picks and shovels, right? In the AI spend. But valuations have gotten ahead of themselves today. Tomorrow night, we have NVIDIA's earnings, and that's going to tell us everything we need to know. Is this real for this quarter? Or can we kick and punt and go down another quarter and still run up the score on some of these AI stocks with the valuations? But the long-term AI is the real deal. There's going to be winners and losers, and this is a stock picker's market, not an index market.
All right, thank you so much.
Hi, Robert. Thank you so much for being here. I am really passionate about going into wealth management. Last summer, I interned at Morgan Stanley, so I do resonate with a lot of things that you had mentioned. I do want to know, what advice would you give a college student who wants to go into wealth management and wants to be successful in this industry? What are some proactive things you would recommend us doing now?
From a getting a job standpoint, or from a preparing for the industry standpoint?
Yes, preparing for the industry.
Okay, so wealth management is so awesome. And the reason why I love my industry and my job so much is because there's so many different verticals. I have a finance degree, I have a marketing degree. On my finance degree, unfortunately right now, and I'm not saying anything, but you have to know your finance. And I love my finance degree, but I got an app for that. You can't get me an app for my marketing degree, right? So in our industry, There's marketing. In our industry, there's investment management. There's business management from entrepreneurship, right? Owning my own business, working in the business and on the business. So my take home point to you is, negotiating and sales, right? Customer acquisition, business development. So again, I'm going back to my Audible. Constantly feed your daily digital to prep your logarithm on your TikToks, on your Reels, to short circuit that to prepare you, because you'll get a lot of great advice. But also go to Audible and start like getting a lot of these good books and prepare. The historical perspective of the market is very important too. So learning the industry of like about 1987, about the 70s, right? So that's a lot of great ways, because when you're trying to connect with somebody, especially out of the gate, and somebody's telling you about the 70s, and you're like, you don't even know who was president in the 70s or what the financial issues were, the headlines were at the time, you're going to lose credibility, but you can gain it right away. Be like, oh yes, in the early 80s, the prime rate in 1982 was 21.5%, right? And oh, by the way, they did have assumable mortgages back then. Today, the Trump administration is talking about an old concept that's new, is like, hey, can you assume the mortgage? You buy the house and get the 3% mortgage. That's going to unlock the housing. So that could be interesting how this plays out. But the historical perspective of that, I think it's important to learn in addition to everything else you have to learn.
Do you have any book recommendations?
My number one, and you'll love this one, is Robert Kiyosaki's Rich Dad, Poor Dad. Okay? If you've ever read that. And then read his series. He's got one that is with Graham Sutton, and that's a CPA. And I learned so much being in real estate. My wife's a real estate agent. I have a real estate. My family's been in real estate. I grew up on the kitchen table. My grandfather built a real estate portfolio, right? As an immigrant in this country. So I grew up on the kitchen table. Thanksgiving, my brother was a financial advisor. My grandfather was in real estate. The amount of unbelievable arguments that I watched my grandfather and my brother have, and I'm 6 years younger than my brother, so I have nothing to contribute. I'm a fly on the wall. It was fantastic. It was the best education I've ever had, because one's not better than the other. In fact, they do different things. And you should have both investments and real estate in your portfolio. And if you're smart enough, you know how to use both of them together. And oh, by the way, that book, Smart Tax Secrets. So Robert Kiyosaki uses his tax strategist to basically unpack the IRS tax code as to how you could use real estate to basically fast track all of these tax incentives. And that could make real estate in the column a little bit better than investing in the stock market, because you can use leverage and pick up tax savings based upon the IRS tax codes in real estate. So it could be better than the investment in the stock market or not.
Hello, thank you so much for being here. I wanted to ask, what have you learned from the women that you've interviewed that has changed your way of seeing the business world in a way?
Absolutely fascinating, strong, dynamic, unbelievable stories. And again, it's the easiest job in the world, because all I do is literally just, have amazing women in the chair sharing their stories, and I just ask the questions. I've learned a lot. One of the take-home points is I hope that my daughters are following the podcast. I want them to sit where I'm sitting and do it, paying it forward, right? I'm doing it today. I'm building the framework. I'm building the infrastructure the way I see it. I'm playing the long view. But it would be cool if one of my daughters or any one of you came in, in my chair and then carried the torch, right? Another thing I wanted to address, and it might be important to address this too, when I decided to, in financial services, address women in wealth, right? And serve women, wealth, and wellness. Everyone's like, well, you're a guy. What's your why? That's why I started with my why. Because the world that I'm in, my kitchen table is, bright. I'm an uncle of 7 nieces. Oh, by the way, women, there's a lot of industry journal that basically says and reports that women 50% want a male, 50% want a female. And it didn't hit me until somebody said that to me. And I was kind of pissed. I'm and it was a female financial advisor in the industry at my own firm, not the firm I'm at today, the firm I was at yesterday, right? And she was kind of trying to stop me off, get the hell out of here. So I got the old guys that didn't think that women were worthwhile. And I got the women financial advisors that are asking me to leave their turf and trying to intimidate the hell out of me. True story. So then I basically used that as tackle and fuel. I thank you for that challenge. I said at the very beginning, tell me no. That's the best thing you could ever say. 100 cold calls a day, fantastic. I would get 4 or 5 that were a yes every single day. 4 or 5 that were yes. Cumulatively, just keep going with your life. No is the best answer in the world because it forced me to say, you know what, I'll take the other side of the trade. I will actually take your argument and I will unpack your argument because you might be valid. Why should I serve women, wealth, and wellness? Why should I do that? And then I realized, no, I found out who I am, what I can do, and what God blessed me with. And I said, nope, I don't have to listen. And I'm gonna do it my way.
Thank you so much, Robert, for all of your insights today. We've truly enjoyed this event. And as we're wrapping up, I want to say feel free to network with Robert after this event. But thank you, SFA and Women in Business, for putting this amazing event together.
Well, thank you for joining us for the Few podcast. We look forward to filming again, coming back to USD again sometime soon. Did everyone have a great time today?
This podcast is brought to you by David Field Producer. It is produced and directed by David Field and Kristen George. And it's mix, edit, and socials by Kristen George. Blanky Schein Wealth Management is a group of investment professionals registered with Hightower Services, LLC, member FINRA and SIPC, and with Hightower Advisors, LLC, a registered investment advisor with the SEC. Securities are offered through Hightower Securities, LLC. Advisory services are offered through Hightower Advisors, LLC. This is not an offer to buy or sell securities. No investment process is free of risk, and there is no guarantee that the investment process or the investment opportunities referenced herein will be profitable. Past performance is not indicative of current or future performance and is not a guarantee. The investment opportunities referenced herein may not be suitable for all investors. All data and information referenced herein are from sources believed to be reliable. Any opinions, news, research, analysis, prices, or other information contained in this research is provided as general market commentary. It does not constitute investment advice. Blanky Schein Wealth Management and Hightower shall not in any way be liable for claims and make no expressed or implied representations or warranties as to the accuracy or completeness of the data and other information or for statements or errors contained in or omissions from the obtained data and information referenced herein. The data and information are provided as of the date referenced. Such data and information are subject to change without notice. This document was created for informational purposes only. The opinions expressed are solely those of Blanky Schein Wealth Management and do not represent those of Hightower Advisors, LLC, or any of its affiliates.